we're so excited to welcome back Cboe Canada listed Base Carbon, who listed with us nearly 3 years ago now. It's a pleasure to welcome Michael Costa, CEO of Base Carbon. Michael, thank you for being with us today.
Thanks, Tanya. Really grateful to be here. And when you say 3 years, it's on one hand, it felt like a really long time, and on another hand, it feels like overnight. So it's not sure which camp I fall into today. It
Yeah.
depends on the day.
I bet. I bet. Michael, you and your team, of course, have been busy. You mentioned that 3 years, sort of sometimes feeling long, sometimes going really quick. There may be people on this call who are learning about you for the first time. So could you just give us a brief overview of the company and the team behind it to begin?
I'd be happy to, and I'll steal your line of just housekeeping items. My internal counsel would be remiss if I didn't remind people that there may be forward-looking statements that are said today. So now that I've
Good
said
on
that,
you.
and make sure that our lawyers are happy because we got to keep the lawyers happy.
Always.
But right,
Hmm.
Base Carbon is a publicly listed company, as you talked about. 3 years public, as we've almost right on the precipice of that 3 years. But we're a business that we've raised about 50 million US dollars. About, yeah, well, exchange rates have changed a bit, but 65 million CAD, 67 million CAD to date. And we've allocated that capital primarily into upstream carbon projects. And so, a lot of the viewership here will be familiar with upstream natural resources, extractive resources, where you build a mine or you extract oil and gas, you plant some trees. Very, very common in the Canadian capital market, certainly in the junior market. Our business is similar to those in that we are at the the start of where the commodity is generated, allocating capital into jurisdictions and the projects that can generate the commodity. In this instance, we've generated carbon credits. And but where it's different is that the extractive resources, that the commodities are really bounded by geology and bounded by the earth. Our commodity is bounded by legal contract. So really simply, we have 3 projects to date, one in India, one in Vietnam, and one in Rwanda. 2 of them are household device projects. I'm sure we'll talk about what that is in a little bit. One of them is a afforestation reforestation project. Really simple on that one. We plant trees. We plant trees on deforested lands. And by doing these activities through effectively mechanisms that roughly tie back to the original nexus of environmental markets was Kyoto Protocol and then into Paris Agreement. But we generate carbon credits that carbon emitters, whether they be corporations or a look through even the consumers of those corporations purchase, to be able to retire or offset their carbon emissions to get to the idea of a net zero corporation. So for instance, in one of our projects, we have a fixed price offtake with one of the largest global investment and commercial banks in the world. So it's those kind of counterparties that are purchasing these credits. Certainly oil and gas companies. You see big tech, the Microsofts of the world, Salesforce, all of those companies have, I shouldn't say all, the vast
Hmm.
majority of the large tech companies have, significant carbon offsetting programs that have been in place for multiples of years. So that's, in a really, really quick nutshell, that's soup to nuts what this business looks like.
That's the core of the business. And you kind of hinted a little bit at how you sell carbon credits. Do you want to dig any deeper sort of into that?
Yeah, I would love to, but maybe I'll give people a sense of how our projects work to understand what the
That'd be great.
buyers are buying, and then we can talk about the sales process.
For sure.
These short calls are always really difficult because it's such a
Mm.
complex industry at a level that there is, each part of it is really, really simple and complex, but it's really hard to find that line between summarizing for people and then
Mhm.
answering the nth question for them in these kind of calls. But I'll try to do my best for you and your listenership. So I referenced in the sort of the interlude that we have 2 household device projects in those, and we have 1 reforestation. So really simple, sort of high level. Base Carbon as capital. We work with a in-country project developer in these instances in our 3 sort of initial countries and allocate capital. In the household device projects, we're allocating capital for the capital purchase of a clean cooking device or a water purifier. So those households, when they burn largely woody biomass, emits carbon in the atmosphere. They do it to heat their homes. They do it to boil water so that it's potable. They do it to cook their food. And there's a number of social benefits of reducing the amount of wood that has to be burned, because less wood that needs to be brought into the house, less time away from children, less time away from the household. A whole bunch of really good stuff happens that way. Also,
Hmm.
you're breathing a lot less smoke in your house, hut, whatever the case may be, depending again on the jurisdiction. And so there's a health benefit. But the carbon credits are really generated from the portion of that woody biomass that is not burned because of the efficiency of our clean cooking device. So less wood burned, less carbon in the atmosphere, carbon credit, all these other social benefits. Carbon credit can now be sold to a carbon emitter that says, hey, I fly my employees around on airplanes in the world, and I can't offset that. I need, so and so in New York next Tuesday, but the carbon credits can offset it. It's that idea of what that offset market is. So, and then to just talk about that is effectively carbon avoidance, carbon
Hmm.
sequestration, carbon capture is in our instance is done in a nature-based manner. So in India, we've planted 6.5 million trees to date on all smallholder farmlands, about 5 hectares or less. We're planting fruit and nut trees as well. We put in water irrigation. It's really, really good for the farmers, but it's also good at the trees. As trees grow, carbon-based life forms, sort of like we are too.
Yeah.
But tree grows, carbon gets sequestered. There's an incredible amount of science behind how this is all calculated, and we generate carbon credits. The so that's sort of really high level how we generate them. So now we're sitting on
Hmm.
these carbon credits. The question becomes, who buys them, and why do they buy them, and what do they pay for them? Like, those are sort of reasonable
Absolutely.
and reasonable and basic questions. Um, the who buys them, as I said before, is a whole long list of largely corporations. And these credits are generally, not always, but when you look at the industry as a whole, many of them are generated in the global south and are being transferred into the global north, in terms of developed countries, in to offset industry, to offset airline flights, to offset all of that. The In Vietnam, we have fixed price offtake. We have a lot of it in our disclosure, but global investment bank, multiple $100 billion market cap company, and our fixed price offtake has in that project has returned us, you know, that project we allocated just over 20 million US dollars into, and we allocated that capital about 2.5 years ago. As we sit here today, we've delivered the project on time, we deliver the project on budget, and we've not only have generated back our capital that we invested, but we've gotten nearly a 3/4 of a turn of capital return. So we generate free cash flow. In fact, the capital that we've returned across our book roughly equates the capital that we've put out the door only 3 years into this business, which is again
Incredible.
markedly different than junior mining, junior oil and gas. Just the shape of payback and the risking of payback is much better. So that's our Vietnam project,
Hmm.
at a high level in terms of who's buying. If you look at our Rwanda project, we have the first correspondingly adjusted tagged, the first Article 6 tagged credits on the Vera registry. That's a really, really big deal. People probably have to like, what's a Vera registry? What is all this? What it means is that these are the first credits on one of the effectively two major registries in carbon. So think about them as the registrar plus the custodian, if you really want to think about it that way, in equity land of these credits, that allow these credits to not be double counted on a worldwide basis. Where that's important is that tag is the ticket for credits into the airline offsetting scheme. So our credits can be effectively tendered into the registry, turned into a new credit, just a different methodology, and being sold into this carbon offsetting scheme. So it's no longer a corporation that says, hey, this would be really good for us to reduce our net zero. It's a corporation that says, or an airline that says, hey, we have to do this because we're signed up to this. And effectively, there are gaps, but effectively all the more than vast majority of all Western world airlines and countries have signed up to the airline offsetting scheme, which is called Corsia. Yeah, I encourage. We
Okay.
don't have enough time on this call to go through what Corsia is and all the nuance of it, but I'd encourage people to look into Corsia.
Yeah, I think we need a whole half hour on Vera and Corsia on its own.
Exactly.
Yeah. Yeah. Oh, that's really helpful differentiation though for investors comparing, where their dollars go. So thank you so much for that perspective. In terms of the revenue aspect, you hinted at that a little bit. Do you want to talk a little bit more about what kinds of revenues are generated from the projects that you're
Yeah, for
delivering?
sure. I think what I'd like to talk about is really, again, I use the term the shape of the cash flows and the
Okay.
expected cash flows from these kind of projects. And I think that's really important in the junior market to understand what the differences are of a business like this, because I think that people look at, hey, upstream commodity producer, it's a new commodity. Well, maybe, should I look at carbon, or should I look at molybdenum, or should I look at tungsten? And we're
Yeah.
just so much different than the extractive resource businesses. So as I said before, we've allocated round numbers about 35 million US dollars into our projects. And again, round numbers, we've generated that amount of revenue and free cash flow back to our business in that amount of time. So the capital intensity in these projects is largely in the upfront capital.
Okay.
In our instance of the way our book looks now, the planting of trees, the distribution of water purifiers, the distribution of the clean cooking devices. There is OpEx, but it's really, really low. It's much lower than again any extractive industry. There is sustaining capital, but it's really low. And so what you generate is, if you think about the three sort of like negative cash flows in a company of this nature, growth capital, sustaining capital, operating expenditures, the vast majority of that pie is in the upfront capital. So your knowability around your capital is really, really high. Again, unlike a mine that takes a lot of time to build and you can have cost over, I've never seen a mine be delivered on time or on budget. We've delivered effectively all
Yeah.
three of our projects on time and on budget. We've planted 6.5 million trees in Rwanda. We've in a deal that we signed, gosh, less than 18 months ago in Vietnam. The that transaction speaks for itself, and same thing in Rwanda. And part of the reason we've been able to do that is working with world class project partners. We spent a lot of time and energy selecting those. But going back to talking about the nature of the revenues and the cash flows in the business, we have much higher predictability around what our capex is and the knowability around that capex, and as a result, the delivery of the project. So for base carbon as a business, when you stack it up versus a lot of other upstream commodity businesses, what you end up seeing is that those businesses go out and I'll pick on mining.
Yeah.
I was in the mining industry for a long time. There's a place in my heart for mining, but it's a really tough business,
Yeah.
and it's on the exploration and even development side. You go out and you spend a lot of money to be able to drill a deposit, and your prize, if you do really, really well and you hit something really, really big as a shareholder, is massive amounts of dilution, massive amounts of development capex, and a lot of time to get to the point of an asset. The For our business, just looking at it apples to apples,
Hmm.
in effectively from we talk about the 3 years we talked about at the beginning of the call, from going public, we now have a business that has paid back its capex that it's put out the door. We've generated, two of our projects generate credits. In our India project, we're expecting to generate credits this year. We've been able to put in place fixed price offtakes. We have a lot of optionality in our book, and what we don't have is a bunch of unfunded or unknown capex out the curve. We don't have is the significant risk that, oh my gosh, OpEx went through the roof, and now my margins aren't what I thought they were going to be. What we don't have is, oh wow, I need to go buy some tires for my 777s, and all of a sudden, I'm spending an incredible amount of money that really cuts into the margins for the shareholder base.
Yeah. Really, really good, important differentiation there between the mining extraction world and what it is that you do. Maybe you could talk a little bit about how you set yourself apart from the competition within the carbon market and what differentiates what you're doing from maybe your peers in this market.
Yeah, the it's this is a in terms of public capitalization, there's not a ton of public companies
True.
that have focused on carbon. And so I want to expand, competitors to those that are allocating capital to carbon projects, broadly.
Hmm.
There's a couple of other public companies. There are certainly a handful of private companies. This is done on balance sheet, as you can imagine, at a lot of the, I shouldn't say, at some of the large carbon emitters, some of the largest oil and gas firms in the world are some of the most sophisticated businesses in terms of carbon. What we've done is we've taken the skill set of our team as capital allocators, people that have run operating businesses and know how difficult it is to operate, and know that we measure thrice and we cut once. Secondly, as capital allocators, one of the things, as in my prior career for 20 years as a portfolio manager, I always thought that companies were really, really poor on risk management and capital management, notwithstanding that they might be really good at running a mine, or they might be really good at, pick another business, they're running a refinery or whatever the case may be, but they were sort of really terrible at thinking about capital allocation decisions. And at a level of public company, notwithstanding you have an operational component to it, and a large part of it, you're still managing capital and capital risk on behalf of the stakeholders and the shareholders. And so taking that, especially when you think about allocating capital in an upstream industry like this, and again, we are operating, but taking that experience and that skill set and deploying it into this industry has been really good for us. So, one of the things we did was, instead of going out there and having the first shiny object that we saw be the thing that we were gonna allocate capital in, we really took our time. I used this term before, but we use it a lot internally. We measure thrice, we cut once, and we spent a lot of time understanding which in-country project developers, in-country project partners, which are critical when you're working in jurisdictions around the world, especially global south jurisdictions.
Yeah.
Which ones of those, basic stuff, who had done it before, who had good government relations, who were ethical and reasonable counterparties that we could actually rely upon. Just some of that basic stuff. And
Yeah.
a big part of our success has been our project partners, and we really enjoy working with them. And I can't say enough about the three of them. The second thing that we've done is really think about our business in terms of our equity cost of capital. Again, thinking about managing risk and managing accretion, for our shareholder base, of which all of us as individuals are large shareholders, have written real dollar checks into this business. But when we started out with, after our large capital raise, which is a $50 million CAD raise when we were private, about to go public, co-underwritten by BMO and Raymond James, when we were at about, I'm trying to remember the exact number, but we were about like 127, 128 million shares outstanding. We're now sitting here at about 111 million shares outstanding. So how do we do that? We use our normal course issuer bid in Canada. So, we've aggressively bought back stock. We're very comfortable and understand what our NAV is. And even outside of the NAV, we understand the optionality in our business, and we think it's highly skewed to the upside. But we get very comfortable with that, with a business where, as we sit right now, we have over $13 million of cash sitting on USD cash at these, Canadian dollar, US dollar exchange rates, with a Canadian dollar stock sitting
Yeah.
on our balance sheet. So for us, I think that I don't like the whole, what do you do better than these other people, and what do they do poorly versus you? But I think that if I had to characterize ourselves, it really is that rigor and that prudence that we've taken to all of the activities we take in our business, whether it be our share capital, certainly our projects, and we take that of how the next phase of base, how we think about growing this business, and use that backdrop of what is our equity cost of capital, what is the best way for us to allocate our capital in an accretive manner for our shareholders. We're very uninterested in building empires. We're very interested in having like high levels of share price accretion for our shareholders, and doing it in a sustainable, and repeatable manner.
That's excellent. Really good insight into the strategy and the focus for the business. If you think sort of near term and longer term, can you provide any insight into what future plans might look like or what priorities from a strategy perspective could look like?
Yeah, I think that when you think about a company, particularly in the junior market, the the strategy, I don't like the strategy. When I think about the option set in front of us,
Sure.
the where we see a lot of opportunity is we see a lot of opportunity in the types of projects that we have on our books, but I would call them rifle shot opportunities. Again, has to be with like super high quality developer. We really like the aspect of having offtake or fixed price offtake, especially being a public company where people aren't thinking about carbon all day long and they say, hey, how do I you made these things, how do I know they're valuable? We know they're valuable, but how do I show somebody else that's going to buy the shares that it's valuable? So, we like that aspect a lot. And we like the aspect of the duration in our business. As I've said, we're basically, if you think about,
Mhm.
we're at payback of our capital, in a very short amount of time but that's not our projects all in. Nobody invests to just get their money back. That would be, a fool's errand. But
Mhm.
the amount of optionality in each of those projects, both in the actual transactions we have on, as well as the contractual ability for us to expand certain projects and other programs and activities with our partners, is really valuable. So I'd say there's rifle shots across the project types and, even potentially with some of the project developers that we have. Number two, at the right equity cost of capital, and we're buyers here. We've used our NCIB aggressively. We've told the street that we will continue to thoughtfully and usefully, use our NCIB. We will do that. You never grow a business through using an NCIB, but we have a very sticky shareholder list. It's a very sticky shareholder list, and we know a vast majority of our shareholders. So not really sure how much paper is left out there for us to buy, but we're happy to be the buyer and soak up some of what we think is just incredibly cheap paper. And then thirdly, I would call it near carbon industrials is a place we've spent a lot of time and energy.
Okay.
So it's businesses that have a industrial component, but also have carbon that's generated with the business. There's a duality there of a lot of those businesses. So we've spent a lot of time there, and I want to be really careful what I say, but there's some businesses out there that we look at. There's whether it be partnerships, whether it be us, working with a project developer like we've done, but having that again, that duality, in the projects that we're in now, it's carbon and carbon only, but having that duality of an industrial component, but the carbon in the
Mm.
industry is inextricably linked. We really like that as a platform within our overall business.
Yeah, I could see that being really beneficial. You mentioned a little bit about your sticky shareholder base, which is great. For potential investors who maybe haven't looked at adding you to a watch list or considering base carbon yet, why might they take a look now?
Yeah, look, the for this business, I think that, and I'm going to wear my old portfolio manager hat, but
Sure.
I always, I always think about what is the margin of safety if I'm buying a stock. Where I spend all my day, many of my nights, as our entire team does on base carbon, but I can't ignore that I was a PM for a million years. So what is my margin of safety? And at the price that I'm buying, what bets do I have to make? How much downside case do I really think there is? And you know, what do I need to know to believe that? And then how do I make multiples of money in the business, especially in the junior market? As I said before, we've got over 13 million US dollars of cash on our balance sheet. We continue to generate free cash flow, and we have no, significant unfunded, capital. All of our capital has been spent in India, or sorry, misspoke, in Vietnam. All of our capital has been spent in Rwanda. In India, we have about $3 million left to go. That project will start producing credits this year. So we have three producing projects. No, like, hey, they've got a lot of cash, but they're going to have to spend it all at the end of the year and raise more. We're not
Right.
reliant on the public market to raise capital. At current exchange rates, something like 40% of our market cap is just in cash. And remember, we're continuing to generate free cash flow. So,
Right.
this isn't like, hey, they raised money 3 years ago and that's the money sitting on their balance sheet and it's this dwindling balance. We generate free cash flow. We actually have pretty good liquidity. We trade, like on a 90-day ADV, we trade over 300,000 shares a day. Thank you, Cboe.
Yay.
The so it's not like one of these little situations where you can't actually go and access paper and buy
Hmm.
paper if you want to get a reasonable position. And you have a management team that actually knows how to manage risk. So you sit there and I look and I say, wow, it's a business that has reasonable enough liquidity for the junior market. I can take my view of out the, what if I'd encourage people to look at our financials and look at what just the balance sheet value of our assets are. That is an accounting value, and there's a lot of optionality in our opinion that's not even remotely baked in there. But you have a business that's been proven. You have a business that's not reliant upon the public markets to fund itself or to build its business. In fact, as I've talked about here, we use our share capital to buy back shares. The We have a management team that's done it before. We have 3 producing projects, and we've been able to prove this business model as well as how we've brought together this network and this team into this model. All of that to me makes an incredible amount of sense. The thing that you may be too polite, not too polite to ask, but I'll bring up anyways, is then to me, the
Do it.
natural question is, well, why is the business cheap? Like, why is the business cheap? I think some of it, I own a lot of, in my family account, a lot of Canadian junior market stocks, like I'm sure a lot of the viewership here does. The junior market's been terrible, absolutely terrible.
Yeah.
We went public day 6 of the conflict in Ukraine. And it's been, from a public market standpoint, it's been, in, I wouldn't say an uphill battle, but it's been a hard slog in the junior markets. But that's Canadian junior markets. You go through 1, 2, 3 years of that period of time. I think that we're
Yeah.
much closer to the end than the beginning of that. And then the second thing is, because we were the second carbon business to go public in Canada. We knew about 4 or 5 other ones that were about to go public. Again, wearing my old portfolio manager hat, we very much are a special situation that somebody doesn't come with a bunch of mining experience or oil and gas experience and say, oh, it takes me 3 minutes to understand that. It takes an hour or 2 or 3 of reading to come up to speed on this business.
Hmm.
You know,
Hmm.
we're happy to bring people up to speed as well if there's real interest there. But once you're up to
Hmm.
speed, I think it's pretty easy for people to understand the value, understand the margin of safety right now, and
Hmm.
understand where there's potential multiple money returns in this business. Not because we have to go do A, B, and C in the future, but just in the book of business that we have on right now.
Yeah. Pretty compelling. And I can't
We
think
think
of a
so.
better way to put a summary together of the base carbon business. When I said it would go lightning fast, I wasn't kidding. We are coming up on time. Do you have any final words that you want to share before we wrap things up?
Short answer, no. I think that
Okay.
it's I gave you my here's I wouldn't even call it a pitch. It's just, here's how I think about the business, and we're there as a business. We
Yeah.
are buyers. So it's
Yeah.
it's one thing for companies to sit out there and say, hey, my shares are cheap, my shares are cheap, my shares are cheap, and then they go hang up an equity deal. I get it. They're reliant upon the market to finance themselves, or else they have no business. But we actually have a business, so
Yeah.
and our 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 actions and our repeated actions underlie the things that we're saying. And again, we're large shareholders. We've written checks in the business. The we're there. The final thing I'd say is we do take a duration based view of this business. The markets, right? Everybody's
Yeah.
worried
Yeah.
what your tick looks. What does your tick look like on the stock at 11:30 a.m. versus 10:58 a.m.?
Hmm.
We're interested in creating long-term durable value for our shareholders, and I think that we've done that, and we'll continue to do it. So as a management team, we're really relaxed and we're really comfortable. We work really hard at this, but there's no stress around where we just view it as an opportunity, and we've got ample resourcing and ample opportunity set within our business to continue to allocate our capital and grow this platform.
That's fantastic. Well, thank you so much for sharing your mission with us. And of course, thank you for choosing Cboe as a partner. And to our audience, thank you for joining us. Stay updated via our social media channels. Be sure to check out Base Carbon and other Cboe listed issuers. And we hope to see you again soon. Thanks for
Thank
being
you
with
so
us.
much. Really appreciate you hosting us. Have a great day, everybody.